Spotify has a great offer for fans of Korean dramas and OSTs. Upgrade to Spotify Premium and get 2 months of View Premium subscription, giving you access to unlimited Korean music, dramas, and variety shows on the go. Click on the banner to find out more. Upgrade to Spotify Premium today and get 2 months of View Premium subscription anytime, anywhere. Terms and conditions apply. One more time, sitting in silence there. Only one that's here. Yeah. Let's just get it all out. Give me every single word, even if it's gonna hurt. 'Cause too many nights I'm falling asleep with all of these doubts stuck in between us. Being polite, it's getting us nowhere now. So if you wanna stay, just stay. If you wanna go, if you wanna go, just go. If you wanna stay, just stay. If you wanna go, if you wanna go, just go. Go far away, go far away. That's just fine. you can find some tears, and I can feel something real again. Oh, you and I know we figure this out. Tell me, is it too late now? There's too many nights falling asleep with all of these doubts, stuck in between us, being polite. It's getting nowhere now. So if you wanna stay, just stay. If you wanna go, if you wanna go, just go. If you wanna stay, just stay. If you wanna go, if you wanna go, just go. Go far away, go far away. We've built so much just to stand and watch it fall apart. It hurts too much just to stay away. If you wanna stay, just stay. If you wanna go, go. If you wanna go, just go. If you wanna stay, just stay. If you wanna go, if you wanna go, just go. So if you wanna stay, just stay. If you wanna go, if you wanna go, just go. Go far away, go far away, far away, go far away. Okay, it's 8 p.m. now. Just a quick check. Those who are on inside the room, can you hear my voice? And for those who are following us and watching it on YouTube, if you can hear, right, just type a yes so that I know that everything is set up, and then we'll start sharing what for today. Okay, good. Okay, so what we'll be doing for today will be slightly different from our usual week, right? Because the US election, basically from today's reaction, you can see is not a fundamental play. It's perhaps not a very technical play as well, because what's going to move the market recently would definitely be the sentiment that is moving on, all right? And I would assume all of you who are trading the market would already know that the outcome of the US presidential election will be Donald Trump winning the election itself, all right? And of course, you can see in the market as the election goes by, how market move accordingly when the vote count is being shown as well. All right, so basically for today, what we'll walk through is some of the potential, how market has evolved, all right, from the US election, and what are some of the potential setups and things that you need to take note of moving forward, right? When we mean moving forward, it'll be more of a longer term, up to end of 2016, right? But basically, things that you need to take note as well is going into December, right? The market will tend to be quiet. Traders are taking their trades off the market, all right, closing off their positions to end off the year itself, and going into December in the Europe as well as the US is more towards the festive season, right? Christmas and New Year, etc. So traders wouldn't be actively taking in new position, all right? So these are the things that you need to take note of. So it's definitely going to affect the market because liquidity is going to be thinner, all right? And you tend to see more whipsaw going inside, all right? So if you are actively trading during this period, all right, especially December, do take note about all those things.
Right. So the first thing I want to walk you through is, as usual, all right, we won't go through today the fundamentals simply because this 2 weeks, to remaining of this week and next week itself, it won't be, market would highly unlikely follow the fundamental, all right? So we look into mainly the sentiment and some of the technical setups that we can get. All right, so do take note that other than the US presidential election for this week, the next important piece of news is actually going to happen soon. If you're in Singapore, right, that will be later at 4 a.m. Right, on Thursday, right, 4 a.m. on Thursday, we have the RBNZ cash rate, as well as the official, RBNZ rate statement, as well as the official cash rate. All right, so over here, if you look at this, analysts and market is expecting a rate cut. All right, and if you look into Kiwi later, I'll share with you my long-term perspective as well. Technical wise, is showing that Kiwi is gonna see a huge fall. If not end of this year, it will be next year. All right, soon. All right, that will gonna happen soon. And we never know, because this rate cut might be the catalyst to push the Kiwi lower. All right, so this is just something to take note. Fundamental wise, all right, Kiwi economic performance has been showing sign of improvement. All right, but if the RBNZ decide to cut rate tomorrow, we might see the sell-off happening very soon. Okay, the other thing I would like to share before we go on to the chart is that with Donald Trump winning, high chance that we won't see a Fed rate hike in 2016, all right, because of the uncertainty, some of the policies that Trump might introduce into the economy, highly unlikely the Fed is gonna increase rate in December. All right, so this is something, if you're trading, you need to also take note that rate hike might probably be postponed to 2017. All right, so with this two in mind, all right, so with this two in mind, I would actually go on to the chart. All right, hold on. Okay. So, okay, I think now it's much clearer. Okay, so with this in mind, I'll go on to the chart, all right, to share with you some of the technical analysis that we have. All right, so at the same time, if you have any questions, feel free to ask them, or if you have any particular pair you would like me hold on. Okay, is my voice repeating? Are you guys able to hear it clearly? Now is it better? Okay, can okay, good. I'll continue on. Right, if it's repeating, you might want to check. Okay, for Esther, you might want to check if you have two platform that is on, because the rest are okay, right? So you just check on your side. If you have two platforms on, you might want to off the other one, because if you have two platforms, then you actually hear background sound repeating twice. Okay, so for dollar index, this is on a daily perspective. All right, what I want to show you is since at May, all right, this year 2016. Right, we have been showing you on our weekly report that price has been respecting this bullish channel very nicely. All right, and just before the US election, as of last week, all right, we can see price actually reach the top of the channel, and technical wise is showing that the dollar index is gonna fall. All right, and but of course we do not know what's going to be catalyst, but you can see that from today's election itself, price did make that correction coming into the bottom support over here. All right, but over a long term, all right, if you continue to look at this is on daily time frame, we might expect dollar to continue rallying. All right, it's still technically in an uptrend. All right, just that for this week itself, today after the election, you can see that this massive bearish candle. All right, but if you look at the larger perspective, it's still on an uptrend. All right, so I did another analysis over here. This is on the daily perspective as well, but this is on a longer time frame. right? We might expect the dollar index to eventually reach 100.49. Okay, and of course, this one, when I mean $1 still an uptrend and reaching, you need to take note of the time frame that I'm referring to as well. Okay, because if you are trading on 5-minute, 15-minute, or intraday, price might still go lower. All right, so this one is more of a longer perspective. I'm waiting for price to reach 100, and eventually, you know, in 2017, we might even see dollar rallying up to 106.37. Right, this is a very long-term perspective. So this gonna help me to you know, identify that over the short term, all right, our price might still fall, but I would see this orange trend line over here, as you see, supporting price. All right, so if price break below this orange trend line, my whole analysis might change. But as of now, all right, I'm still long-term bullish on dollar. Right, so this gives me a perspective, because if we look into all other major currencies like the euro dollar, pound dollar, all of them have dollar in mind. All right, so you need to take note for dollar index as a whole, where dollar is going to travel. Okay, so long-term perspective is going to go up. All right, but if you ask me, as of maybe next week towards the end of 2016, I'm highly predicting that it's going to just consolidate around this level, around 96.5. Okay, so today, right, you can see that there's a huge dip, but then price rally all the way back up. Right, so as of now, I'm still expecting dollar to move higher. Right, so let's take a look at some of the major currency pairs. Okay, I didn't prepare any pre-analysis. All right, so I'm just going to share with you straight off from the chart as we walk. All right, so if you look at euro dollar, all right, the relationship between euro dollar and the dollar index is almost inversely proportionate. Right, as dollar index rises, you can see euro dollar is respecting this bearish trend line very nicely as well. So long-term perspective, I'm expecting the euro dollar to fall towards at least 1.07. Right, around this region. You can see that price rallied strongly, but then it got rejected after that. Okay, still respecting this bearish channel. Okay, so as of now, long-term wise, all right, I'm still bearish on euro. But if you ask me on near term, all right, I'll look at this chart to share with you if shorter period, as in nearer term, all right, the remaining of this week and next week, do we have any setup? Right, I'll just share with you on the 4-hour time frame to see if we have any potential setups going in. Okay, not really any nice setup going in because of this today's candle. All right, basically it destroyed quite a lot of technical analysis from a shorter period of time frame. But if you are looking to trade going into this week, right, I would say the bias on euro dollar is due towards the downside. All right, taking my perspective and clue from this chart itself. Right, I'm still expecting dollar to euro dollar to fall. Right, if you look at pound dollar, okay, I'm still expecting price to experience some form of rally towards the previous resistance over here at 1.2850 area, 1.2860 around the area. All right, I'm still expecting price to reach higher before we look for a potential sell trade on pound dollar. All right, if we go into a smaller time frame to check out. Right. Let me just clear this chart that I drawn some time back. Okay, for pound dollar, all right, on a H4 time frame, I'm seeing some form of bearish divergence happening over here. All right, you can see this is like a double top. But if I look into RSI, right, we do see a bearish divergence happening. Right, so bearish divergence usually signals that price is turning. All right, and if I look into my long-term perspective as well, it's still showing sign that it can go up higher. But if I look into this analysis, all right, basically I'm also exploring wave analysis right now. All right, based on my wave analysis, I'm actually expecting the price to actually start going lower already. Right, but of course the invalidation point here is 1.2545. Simply mean price cannot break above 1.2545. All right, so as long as price remains below 1.2545, my personal bias is actually short, right, towards the downside. All right, and with this for our bearish divergence, all right, we might potentially look for a short trade. Okay, and how do we look for a potential setup is price has to break below this neckline. All right, so we are expecting price to do this first. Price has to break and close below it to confirm that this is indeed a double top with a divergence. All right, and we need to then wait for price to show sign that is pulling back a little bit, and we use a lot of Fibonacci too. All right, so I will pull in my Fib retracement from the recent high to where price starts to show sign of turning. Okay, and I'll actually just pull in my Fib 61.8. Right, so if price retraces back up after it broke the neckline, I'll be looking for a short opportunity up here. All right, but as of now, it's too early to decide to short it. Okay, because price can easily go higher. This double top with a divergence doesn't really, doesn't really work out all the time. All right, so what you need is more confirmation that price must break below. All right, showing you sign that yes, it is turning before you decide to take the short bias. Okay, so if you are deciding to short over here, all right, let me just put in my right tool. You'll be using a short position. Okay, of course, this Fib 618, right, really depends on this point over here, where price is gonna drop. All right, so if price drop further below, all right, then what you need to do is you need to still pull your Fib to start measuring again where your 61.8. All right, so this is something that you need to look out for as price develop. All right, so assume that if price really stop over here, all right, and it retraces back up, we'll be shorting around the 1.2375, all right, and where we put our stop is just above the previous high. Okay, so we're gonna put it slightly above it. My personal preference is I'm gonna give it about 25 pips above the previous high so that it has some room for price to move. Right, this acting as a last sort of resistance. All right, and if price break above it, I would want to get out of this trade. All right, because I'm no longer interested in a short. So my stop should be above here. My first take profit will be at the previous low that is being established as market drop. All right, so this kind of trade risk to reward can give me slightly about 1:1.4 to 1:1.5. All right, a pretty decent trade risk to reward idea. All right, and of course for those who are more aggressive, you can go for the risk for a second target. All right, usually second target, I'll just use Fib again to measure off the 61.8 Fibonacci, 127 extension. All right, for my second target. So what I can do is I can actually, if I'm taking target 1 and target 2, what I can do is I would take half of my position off if target 1 is hit. All right, and I'm gonna go for second target for my remaining half position. All right, some traders I know is that they are more aggressive. They just simply wants to aim for TP2. All right, so what they do is if TP1 is hit, you just move your stops to break even to protect your trades, and then right for the extended target. You can see if you aim for TP2, this trade gives you a risk to reward of 1:2. Right, so this is one opportunity that you can aim for in pound dollar. Okay. Just take note of this. It's still very early because depending on how price is going to react for the remaining of this week and next week. All right, let's take a look at the dollar yen. All right, I'm going to go through all the majors. All right, so because the majors are more of the common currencies, and then after that, if you guys have any particular pair, we'll walk through the rest. Okay, for dollar yen, okay, we did see a recent drop over here, and then some form of consolidation. Right now, price is still consolidating. Right, but price has broke above this downtrend line, and right now the bias on dollar yen is definitely on the upside. All right, shorter term period is still on the upside. You can see that previous minor support has held this level pretty nicely. So now we are expecting price to reach higher towards the 106.55. Right, so you look at dollar index, we are bullish on dollar index, so dollar yen is also bullish. All right, and if you look at pound dollar, right, we are bearish on it, simply means we are buying dollar. All right, so overall, my personal stake is I'm actually bullish on the dollar itself. Okay, and this is again daily time frame, so you need to take note of that. Okay, so I'm going to show you on my wave analysis on dollar yen. Okay, currently is experiencing what I call a consolidation. Okay, and of course from now the consolidation price has to reach the last final point E. Before we can see any form of drop. All right, and the invalidation point over here is 101.10. Okay, so if price break below the 101.10, this entire consolidation analysis is going to be wrong. But as long as price remains above 101.10, we can expect price to rally higher towards the 104.95. Right, so that's the area to look out for. This 104.95 is actually slightly lower than this, but you know, this is just rough idea. So we don't trade off the daily time frame. So what I do is I'll then go down to the lower time frame on this chart to show you some of the potential setup that we might possibly take. Right, so let me clear off the previous charts. Okay, for H4, okay, nothing much that is very obvious, all right, but we do have some form of divergence forming over here. Right, you can see RSI forms a higher low, but price actually printed a lower low as of now. Okay, because of this morning election. The tricky part about trading the dollar yen is you need to track the risk environment, the appetite in the market itself. Okay, so basically, if it's a risk-off environment, simply means the financial market is experiencing something very uncertain. How can this happen is perhaps, you know, Donald Trump in the next few days start to share some of his policies that are perhaps very radical, and that might cause a lot of uncertainty in the market moving forward. Okay, then we might see the dollar yen dropping. All right, basically your Japanese yen is going to strengthen. But as of now, okay, my bias is still towards the upside as long as this level remains. All right, this level at 101.1 remains. I'm biased towards the bull. Right, so how can I play this setup is I'm gonna wait for price to do this, okay, to come back, retrace a little bit, and then show me some sign of consolidation over here, and I'm gonna trade this retracement towards the upside. All right, this is my own personal bias towards the dollar yen, using some form of wave analysis right now. Okay, so you need this one is something that I haven't shared with the students, so we are still exploring this strategy and this forecasting methodology. So I'm still beta testing a lot of this concept. So once it's being firm, we'll share more definitely. Right, but as of now, my bias on dollar yen, as you can see from this daily chart, right, is still bullish. Okay, at least towards this high here at 106.25. Right, so this aligns with my dollar index as well. Let's look at Aussie dollar. Right, Aussie dollar is in a huge consolidation over here. Basically, it's trading in a range environment, all right, bouncing up and down, not going in any particular direction. All right, but if I look into my wave analysis chart, all right, my overall bias on Aussie dollar, all right, we are still seeing one more upside towards the 0.8118, all right, around the 0.8120 level before a huge drop is gonna be expected moving forward. All right, so medium term, I am bullish on Aussie dollar. All right, but over a long term, I'm actually bearish on it. All right, my medium term perspective is about 3 to 6 months period. All right, long term is about a year. All right, again, this is on the daily time frame, so you can see that 2016 actually starts around here. So this entire move, as you can see, is happening this year. All right, so I'm expecting for the medium term price to reach at least 0.8120. Right, that can happen close to mid 2017 next year before we see a huge drop moving forward. Okay, so looking at this chart, right, to prove the analysis, that forecasting, this top is gonna be bridge. All right, price is gonna go higher from here. Okay, so with that expectation and that bias, let's look at a smaller time frame to see if we have any opportunity to take note of. All right, in terms of this chart, not much, all right, but it's very similar to the dollar yen analysis that I have. All right, I'm waiting for price to retrace a little bit, and then I'm going to expect a huge rally from this retracement after that. All right, but for those who are following the advanced pattern strategies that were taught as well as structure, basically there's not much setup going on in this chart. Right, the methodology on advanced price pattern, usually when you see huge drop like this due to sentiment and news, most of the time you need to let the market settle down sometime. All right. If you're looking at H4, you need about a week for market to settle down before you are able to spot any new opportunity to trade the market. Right. So as of now, my suggestion to you guys is, if there's no clear setup like the pound dollar, all right, we have a very clear one on pound dollar. Other than that, if you do not have any clear setup, just be patient, right? Wait for one and then take that trade. Okay, so Aussie dollar is definitely not something that is going to be easy trading it because of this choppy environment, all right? But if you are trading the pattern on a daily perspective, daily time frame, you can see that there are some patterns happening, all right? I'll leave that practice to you guys. Okay, if you have any questions regarding your pattern that's not sure, right, after you identify it, always feel free to drop me an email and then I'll reply you accordingly from the email. All right, Kiwi dollar. Right, if you look at this daily time frame chart, you can see that it's currently trying to break a new high. All right, if this support over here at 0.73 holds, we might see another up move. All right, this is on daily perspective, and for those who are very sharp, you would already be seeing some form of pattern to short this market up here. Okay, again, I'll leave that to practice. Just giving you a hint that on a daily time frame, you have an advanced price pattern forming already. Okay, just to share with you, Kiwi dollar on my wave analysis as well. I do expect, all right, one more up move towards this level before it starts to drop. Okay, and this drop is going to be huge. Very similar to the Aussie dollar as well. All right, so I won't go too much in depth because the perspective is going to be the same as Aussie dollar. All right, so shorter time frame. Let's see if we have anything that we can take note of. All right, let me just clear this. All right, we have one pretty clear over here. You can see price prints new high as we go higher. But in terms of our RSI, okay, it prints a lower high. All right, so very clear we have a divergence happening over here. And for those who are trading on structure, right, let me change the color so it becomes clearer. You can see that you have 1 to 2, 2 to 3, all right, and you have this string up as well, 3 to 4. Okay, so we are looking at this. Let me put in the right tool. You are looking at this area, all right, for a previous for price to retrace down and then expect to trade higher. Okay, so the question a lot of traders will start asking is that let me just put in a fit and then I'll show you the whole picture of what's happening. Right, you can see a confluence of 50 for that. Right, so what you have over here is you have two kinds of setup, and these two kinds of setup tends to contradict each other. Right, you have a structure setup 1, 2, 3, 4. All right, basically price is trending higher. All right, and what you are waiting for is for price to come down towards this 50% Fibonacci in confluence with your previous structure over here. Price level around 7,250. All right, for a potential long. All right, in expectation that this support is going to hold and price is going to continue moving higher. All right, so this is one setup that that you can see, all right, from this chart itself. And the other one that you would probably see is this divergence, the orange line. All right, you can see price is printing higher, your RSI is printing lower. All right, but this divergence technically it's formed, all right, because this neckline over here has been breached. Okay, you can see price break and close below this neckline, all right, this midpoint. So what you're waiting for right now would be a 61.8 Fibonacci retracement. All right, I'll just remove the arrows and I'll show you what you're expecting for the divergence. You're expecting price to retrace higher back towards the 61.8, and what you're going to do is you're going to expect that because of this bearish divergence, price is going to continue its downtrend lower. All right, so this over here right now, market is at trading around 7305. All right, the market can do two things. Okay, one, it can rally higher towards your 61.8 Fibonacci, and then from there it can respect this level and then it turns down. All right, the other thing market can do is it goes down straight away. Okay, so what you need to do is you need to start to plan out your scenario. Okay, so first scenario, for example, okay, would be price retrace back to 61.8, right? And this is at 0.7350, right? So if price does this, okay, what you can do is then your trade plan, right, will be to short at 0.618. Okay, so this is your first scenario. Okay, let me enlarge my font. Okay, so this will be your first scenario. Right, the second scenario that you can plan out would be price, instead of decide to retrace higher, right? Second scenario is price starts continue falling towards your structure, right? Structure plus 50% Fibonacci confluence, right? And this will be at price 0.7250. Right, so what is you're going to do if does this, all right? If price does this, is that your trade plan, okay, is going to be buy or long, right, at 0.7250. Okay, so this is your second scenario. So second scenario, let me just change the color. Let's just say, let's take blue. Okay, so I'm going to insert the blue arrow so it becomes clearer what it means. All right, price does this, it comes down. All right, and then decide to bounce off this and goes higher. Okay, so you have first scenario, you have second scenario happening over here. All right, and of course, these are scenarios that we expect price to do, meaning if it's successful, it's going to do this. All right, of course, you have third and fourth scenario, is that if price, third scenario will be if price straight up continue without bouncing off the 61.8, right? In that case, what you're going to do is you're going to get out of your first scenario trade, right? You want to be, you want to get out of the market, right? So that's why you have a stop loss up there. And of course, the fourth scenario can happen is price continue just breaching lower, right? And that's where you also want to get out of this trade, right? Your second scenario trade, because you do not want to continue holding on to a losing trade, right? So what I want to share with you is the importance of being able to understand what are some of the scenarios that market is going to do, or what market can do, right? And you need to pre-plan that before you actually execute a trade, right? So as a trader, what you need to do is not react when the market happens, but response to it because you have already planned it, right? So over here, right, you have two plans, all right? So one is if price goes up from here, retraces higher, I'm going to short it. If price dip, all right, I'm going to buy it. Okay, so if this is happening, I'm going to set my target slightly smaller, right? So that if I'm buying, okay, potentially price is going to retrace back to the 61.8, and then it can still retrace, right? So what I want to do is I want to take at least partial profit out when price retrace to this 61.8, right? I might just exit my full position from this level, right, to book all my profits in. And of course, my stops can be just slightly below it, right, to adjust my risk to reward accordingly as well, right? And of course, if I'm taking the short trade, I'm going to put my short over here, all right? My take profit can go up to the next structure over here, all right? My stop loss just above the previous high. You can see then, my risk to reward is still decent because it's at least 1:1.48, all right? It's at least 1:1, all right? That's a decent risk to reward ratio, okay? So just sharing with you for Kiwi, right? These are the two potential setups that you can look out for, all right? So one is a long, one is a short. Okay, let's look at the last major, all right, the dollar Canadian. Okay, this is interesting. You can see after a huge dip on the daily time frame, price starts to correct itself, all right, retrace up bit by bit, all right. It's not a very strong retracement because price is just inching higher and higher, all right. So what I'm expecting from this perspective is price is going to perhaps test at least the 1.3640. All right, let's take a look at my wave analysis perspective. All right, I'm still expecting price to, okay, for wave analysis, all right, similar is that over here, all right, once price hit the high here, I'm expecting a huge drop further from that. All right, over here as well, you can see my expectation over a long term. Again, long term over here, I'm referring to at least 1 year period. Okay, I'm expecting price to reach 1.1854, right? So I'm expecting a huge drop over a 1 year period. But midterm, all right, I'm bearish over here. Sorry, this one I think is incorrect. All right, I'll just change this. Midterm, sorry, long term will be bearish. right? Midterm will be slightly bullish on this. All right, midterm again is about 3 months to 6 months period. One long term will be more of a 1 year period, right? So as of now, my expectation on dollar Canadian is still slightly up. All right, and then after that we'll see a drop from that. Okay, so let's go over to the smaller time frame to take note of what are some of the potential trades that we might have over here. Right. Okay, we are still seeing this very strong divergence that is still in play. All right, you can see price is keep printing higher high, but in terms of our RSI is actually printing lower high. Okay, so this huge divergence is still in play. All right, but again, I want to share with you that divergence doesn't mean that you can straight away short the market. Okay, because if you short over here, this when price was over here, when this divergence happened, you short over here, you're gonna get stop out, and price prints another divergence over here, you short over here, you're gonna get stop up again, right? So if this divergence, you're gonna short it again just blindly like this, you might get stop up or you might not. Right, so that's why we don't blindly just short when market forms a divergence. All right, we always wait for confirmation to trade the divergence setup, and the confirmation we need is for price to break. For price to break the neckline. All right, and the neckline over here is the midpoint. Over this divergence. All right, this divergence is huge. Usually divergence happen at a double top. Right, but this is huge. So this is the neckline that we identified. Okay, so what I need to trade this divergence is I need price to fall and break below the neckline. All right, so this is the right arrow. Okay, I'm going to change it back to white so it becomes clearer. All right, so price needs to break below this neckline and then starts to show signs of retracement. All right, this is again very similar to the pound dollar setup. All right, then I'll pull in my FIB and I'll wait for the 61.8 retracement to take that short trade in expectation that price is going to go lower. Right, so as of now, other than that, we do not have much setup, all right, other than this potential divergence trade. You can see that price is just moving up and down, bouncing up and down, moving sideways. Okay, so other than this, there's not much in terms of that analysis. All right, so I will look into gold and S&P as well, right? Because those two are very common commodities and index, right? So I'm just going to share with you in terms of my gold perspective. I'm actually long-term bias is bullish, right? And you can see my long-term target over here is actually 1421. So I'm expecting from here, all right, price to actually rally higher towards 1421. All right. This is more towards longer term expectation. Okay, so if you look into smaller time frame to see if you have any opportunities that you can ride this trade, as of now, nothing much. All right, but I'm just seeing that we do have a divergence happening. Okay, but I won't be taking a short trade on gold for now because my bias is towards the upside. Right, so what we can do is we might still see some form of retracement down, right? But I won't be shorting this. And if you want to short and you want to confirm this bearish divergence, this will be the neckline, right? So basically, price needs to break below this before this divergence double top is confirmed, right? So before price break this neckline, I won't be looking for any short trade. My bias is still up, right? Bullish for gold itself. Okay, so you can see my invalidation point is at 1268. All right, so over here you can see that price over here, if price break this low, all right, which is about 1268 as well, my bullish bias would change. All right, and of course because of this divergence, if price break below it like this, I'm more towards a bearish side as already. Okay, so this is just some perspective. There's no active potential trade setup for this particular commodity. All right. Next, we look at the S&P. All right. S&P 500. All right. Long-term bias. All right. Over here, long-term bias. I'm also bullish on this. All right. I'm expecting price to reach at least the 2236 area. Okay. From here, I'm expecting price to rally higher. All right, but of course, it might take a very long time before it eventually reach there. But my long-term bias is bullish on the S&P. All right, so let's take a look at a smaller time frame if we have any potential setups. Right, as of now, all right, based on just this 4-hour chart, we do not have any potential setup. But again, I'm going to share some of my personal methodology that we are still beta testing, right? Is that I'm waiting for price to retrace, and then I'm going to shoot for a buy setup going higher. Okay, this is very similar to the setup that I shared with you on dollar yen, right? But again, this one we haven't shared actively with the community as well as our students because we are still beta testing this methodology to enter the trade, right? Based on wave analysis. All right, so basically, I just shared with you the majors. All right, some of the potential setup. Just to quickly conclude some of the valid entries and setups that we have. One is pound dollar. All right, wait for this to happen. Then you look for a short setup. All right, Kiwi dollar. All right, we have 2 scenarios in play. All right, all these setups are based on H4. All right, so you can perhaps wait for this opportunity either this week or going into next week itself. All right, highly likely this setup is going to occur. Right, so Kiwi dollar, we have another one. Right, over here we have 2 scenarios playing. Potentially you can trade either one of this depending on how price move. And of course, the next one is dollar Canadian. All right, very similar setup as to pound dollar itself. All right, but if you're trading Kiwi dollar, you want to take note because if for those, especially for those who missed the front part, all right, tomorrow morning, all right, Singapore time about 4 a.m., we do have the RBNZ rate statement as well as the cash rate. All right, that's definitely gonna move your Kiwi dollar. Okay, if you're trading it, be aware of those kind of news. All right, and if you look at this, the forecast here, the expectation is market is gonna have, as in RBNZ is gonna cut rate. Right, so 2 things can happen. Right, if RBNZ don't cut rate, we might see a rally in Kiwi. Okay, and if RBNZ decide to cut rate, it might see a small sell-off. It's not gonna be huge, all right. But if RBNZ cut rate, we might see price dipping further. Okay, but if it doesn't cut rate, price might move higher. All right. So this is something that you need to take note of if you're trading this particular setup. All right, let's open up for questions. All right, so if you have any questions right now, feel free to ask so I can answer you accordingly. All right, because if not, right, we'll keep this session, all right, this particular episode of webinar short. All right, because usually our style is after such major news, all right, like the election or Brexit, we usually allow the market to settle down a bit before we actively trade it again. All right, when we say let the market settle down a bit, we usually allow at least a few days, all right, or even up to 1 week time for market to just settle down, and then we come back and trade it. All right, so any questions from the floor or in the room? How come you, okay, so we have a question asking me to go down to H1. Yes. All right, so usually intraday I'll actually go down to H1. So I'll just share with you why I don't do it after the after huge major news like this that's happened in the market today. Right, basically because on H4, all right, you see a huge candle up. Okay, just if I just zoom in so that you can see it clearer. Okay, you look at H4, right? There's one huge candle up, the next candle all the way back down. Okay, so usually when you have this kind of candle happening on a higher time frame, if you go down to lower time frame, let me just show you on H1 how it looks like. It looks like this. Okay, so basically it's very difficult to identify setups when you have this kind of movement in the market. Right, you can see like a V shape or an inverted V shape. Usually when this happens, again, you won't see any setup. And of course, when I mean we won't see any setup is based on the strategy that we are using. Okay, when market does this, we usually don't have any setup that is gonna happen. Right, so that's why this is based on experience. When I look at H4, right, when this happens, usually you won't spot anything on lower time frame. All right, even if you go down to let's say 15 minutes. Right, you can see it's a V shape or an inverted V shape. So usually it's not ideal to trade when market does this. Right? So hopefully that answer your question. Any other questions? Silver. All right. We can go over to silver. I'll just show you on daily perspective first. Let me pull out my right chart. Oops. Okay, we look at for silver on daily perspective, right? This is what I did in terms of this weekend analysis, right? So for silver itself, we did see price rally higher. Okay, so if you ask me long-term perspective, what is my bias? It's very similar to gold. All right, I'm gonna expect another huge rally up. All right, but as of now, price is still in a consolidation. All right, basically retracement mode. Over here, you can see the first consolidation forms a triangle pattern. Okay, this is on the daily time frame. And then after it broke lower, and then now it's another retracement up. Okay, so what can happen over here is my expectation is as long as this resistance hold, all right, we might see price reaching for the next support around the 16.6, right? And if price really drop towards 16.6, it will be a very good price level, all right, to start accumulating silver, right? So if price does this, right, if price does this, look out for very good opportunity to start to buy up silver over here around 16 level. Okay, that will be a very decent level to start accumulating silver. Right. Long-term perspective, how far can silver go? Let me just do a quick one for you. Right. This is, let me just put in the right color. Okay, for long-term perspective, all right, long-term again, I'm referring to 1 year, all right, for those who are not, who forgot, long-term is not next week or next month. My long-term is over a period of year, over a period of 1 year, all right, I'm expecting silver to reach at least 22.7. All right, so that's my long-term perspective. So over here, if price did further towards 16, it will be a very good buy, okay, because my stop can just be below this low over here. So if price dip towards 16.6 or 16.5 around the area, it's a very good buy because if I buy it over there, all right, my stop can just be below this previous low of 16, right? And if I target long term at 22.7, that's a risk to reward of 1:6. Okay, but of course, this one, if you want to take this kind of trade, your trading psychology needs to be very strong because you're going to be holding that trade for very long. Okay, so there are a few things that you can do with trading commodity. You can trade the futures, you can trade the options. You of course can trade the CFDs as well as the spot market as well. Right? If you're holding long term, do check which one the cost of trading is lower because some brokers actually charge you commission for holding on to your CFDs itself. All right. So long-term perspective on silver is bullish. All right. So let's take a look at shorter time frame if we have any analysis going in. All right. Let me clear my charts. All right. Let's take a look at 4 hour. Okay, 4 hour is showing me a divergence. All right, again, very similar to gold that we analyzed just now. But I'm just gonna be sharing with you my perspective. All right, doesn't mean it's definitely gonna be the 100% accurate. Okay, but even though there's a divergence happening here, I won't be looking to short it straight away. All right, the neckline will be over here. All right, this area. So price to confirm this divergence, price has to break below it, and then only then you start to look out for shorting opportunities. Okay, but before that happened, I'm not gonna short silver. And of course, if price starts to retrace slightly, right, as long as it doesn't break this low, I'll be looking for opportunities to start accumulating silver, basically buying up silver, right? Because my long-term perspective is bullish on this. All right, but if you follow the basically patterns, you won't see anything happening over here as well, right? Because of such huge movement in the market these few days, there won't be any patterns forming. Right, so this analysis on silver is very similar to the one on gold that I shared with you. Okay, basically you can see both commodities, both precious metals has a divergence happening. All right, but my stand on it is I won't be shorting it unless the previous low or the neckline is breached. All right, then I'll trade the divergence setup. All right, and just for the, since we are talking about this, I'll just also go over in terms of oil. Okay, oil chart over here. Okay, this is on daily perspective. Just do this. Okay, you can see that oil actually rallied since the start of 2016. All right, it rallied higher from the low of about $26 per barrel. All right, it rallied all the way to $50, and then right now what it's doing is bouncing up and down in a huge range. Okay, this is on daily time frame. So my perspective on this is it's still gonna go higher. Okay, once it's finished this consolidation, it can still go one more wave up. All right, this is a mixture. My analysis right now is a mixture of a little bit of wave analysis as well. All right, we are beta testing that. Okay, so I'm expecting that it's gonna make one more move up towards at least 58.55 area. Okay, and again, this is long-term perspective, so you're gonna bounce up and down over here, and then within the next 1 year, I'm expecting oil prices, all right, to reach about $58.55 per barrel. All right, then if I go down to the 4-hour time frame, all right, to spot if we have any potential on silver, on oil over here. Okay, let me just remove my previous analysis. All right, oil is interesting. All right, so if I just share with you again on a daily perspective, I'm actually bullish on this. All right, I'm bullish bias on oil. On a 4-hour time frame, what we are looking out for, right, is an alignment. All right, we can see that over here already. Okay, bullish divergence happening. Price prints a lower low, but our RSI prints a higher low. All right, and if I zoom in a little bit, all right, we can see this neckline. Basically, the midpoint of this too low is being tested. All right, so if price breach above it, all right, and then it starts to show sign that it's retracing, I might then start to look out actively for an opportunity to trade at the 61.8 retracement if it comes back down, sorry. Right, so if price does this, all right, I'll be looking for a buy trade over here, all right, with stop loss just below the previous low, and then I'm going to target at least TP1 over here, and then I'm going to target extended target as we move up. All right, so this is where I have a higher time frame alignment, all right, together with a lower time frame like H4 to give me an entry strategy. All right, this is a valid entry if price breaks above, and then it starts to show signs that it's retracing. We can enter based on this divergence setup. All right, so I have a few questions here. Let me tackle them. I have one question asking if the bias is bullish and there is a 1, 2, 3, 4 uptrend. We can use yes. All right. So how I do it is I identify the longer term my bias, if let's say is a bullish one. All right. So then on lower time frame, I want to be, I would be more confident. All right, to take a buy setup because my longer term perspective is bullish. All right, but if I see a sell setup, all right, I would still take it. Yes. So if I go over to silver, all right, so I'm sharing with you my overall perspective. All right, so how I approach trading is if my higher time frame trend, right? And my bias is bullish. Lower time frame, if I spot a buy setup, all right, I'll take it very confidently. But if let's say on a higher time frame or longer term perspective, I am bullish, but I spot a sell setup on the smaller time frame, I'll be more cautious taking those trades. All right. So for silver, because my bias is bullish, okay, what I want to wait for is for price to do this. Okay. So right now it has what I'm expecting is I want it to go higher. All right. And then when it starts to retrace, I'll be looking for a setup to buy it. All right. Basically, then I'll have these swings. All right. Then I'll be looking for area to buy if price does this. Okay. Of course, I'll put in my fit from here to here, and then I'll find a confluence of 61.8 or 50%. Right. Then I'll when price really retraces back down, all right, I'll be looking for a buy setup. My stops can be below here, and then I'll be targeting up. All right. So these are the things that, right, just now at the start I also mentioned that as a trader you need to start to plan out different scenarios. All right. What are the first scenario that price can do, and then if price does this, how are you going to tackle that market? Okay, so this is very important. Right, so if price does this and then it starts to show sign that it's retracing, I'll be looking out actively for opportunity to buy it if it really does this. Okay, hope that is clear. All right, we have another question over here. Any assessment regarding US stock and the time frame before entering? Okay, I'm not very clear if I get your questions regarding assessment regarding US stock. If you are referring to S&P as a whole, then just now we did that. All right, just now we did on S&P. But if you are referring to individual stock, maybe you want to let me know what are the counters. I don't actively trade stock. All right, but what I can do is I can apply the similar approach of technical analysis and understanding of technical charts onto the stock itself. All right, so if you ask me S&P, all right, this is on a longer term perspective. I'm still bullish on S&P. All right, this is a bit counterintuitive because what a lot of I would say analysts or traders is going to expect is that with Donald Trump winning the presidential election, all right, we might see a huge sell-off in the market, in the stock market, and etc. Right, but you can see from today is after that huge sell-off, we can see then the huge correction coming back in. All right, basically, if you look at most of the chart today, all right, you basically see that price is actually just coming back to where it started before the election itself. Right, so if I bring you to daily perspective, you can see that before election, today is Wednesday, Tuesday, Monday. All right, so before Monday last week, price was around here, right? And then you can see end of the week, price dip a little bit, and then beginning of the week, price rally, and then today it just whipsaw up and down, and then it just end off where it started, right? So a lot of things that you see in the news is analysis, all right? It might happen, it might not happen. So what you need to do as a trader is trade according to what you see, okay? And of course, you need to have some form of knowledge to do that as well, all right? So my perspective on the S&P or the stock market in the US generally, all right, is bullish over a long term. Of course, in the near term, all right, basically means end of this year, or even early next year, right, price can actually bounce up and down around this region, right? But my expectation is by the end of 2017, we might see 2236 level, all right, S&P breaking the new high. All right, so this is my perspective itself, all right? It can be wrong, all right? So don't just trade whenever I have a bias, all right? Always follow your own individual trade plan. All right, any other questions that you guys have? Oh, okay. For those who are not aware, I'll just share with you. All right. Trump is elected. All right. But the markets now might seem quiet. Because he hasn't really shared much of what he's gonna do going into 2017. Right. So as Trump starts to share more of his policies, all right, what are some of the things that he's gonna change? What are some of the things that he's gonna do as president? Then the market might also start moving again. All right, because right now he's just being elected, but he hasn't really announced what are some of his policies that he's going to introduce into the US itself. All right, and he's only going to start, as in Obama is only going to step down at the end of 2016, right? So as of now, market might still be okay, still quite quiet, right? But as Trump starts to introduce more and more policies, we might see the market start moving again. All right, so any other questions that you guys have? All good? Okay, if you guys don't have any other questions, all right, or if you thought of any new questions later on, feel free to just, you know, drop us your questions, you know, either through Facebook or email me, or drop by our website. That's where you can get our email as well. All right, feel free to do those things. All right, basically the whole idea here is we would like to just share and connect with you guys. And hopefully through this bouncing of ideas and insights, we all grow together as a trader as well. All right, so just to end off, a quick reminder again, risk events wise, tomorrow we have RBNZ. Oh yeah, since I'm on this, let me just, I recall my experience trading on the RBNZ cash rate. So I would just like to share this with you guys that if you decide to actively trade the RBNZ's RBNZ cash rate or rate statement, take note that this timing at 4 a.m. right is a transition time of trading session. Basically means US session is gonna be off, and then that's where your Asia Pacific trading session comes in, right? And because of that transition, usually liquidity is very thin. And if you are trading, you know, breakout strategy and such, high chance is that you're gonna get slippage on your broker. Okay, I personally experienced that. The slippage can go as high as 60 pips. All right. So if your TP is, let's say, you know, I trade a breakout, my TP is 50 pips. Price can slip you 60 pips away, and basically, you know, you would have been a profitable trade without that. But because of slippage, you might end up, you know, suffering a huge loss if you do not know how to manage those kind of slippage. Okay, so just my personal experience when I was actively trading this during this particular time, right? Because this is a time where there's a high impact news coming in, and there's also a time where you know, there's a transition of trading session, and liquidity in the broker in the FX world is going to be very thin, right? So take note of that. That comes with some form of experience last time when I'm trading actively during this session, and the slippage is crazy. Okay, so again, if you are having a pending order, or you know, breakout, basically your buy stop order or sell stop order, take note of that. Okay, we have one more question. All right, what is my personal perspective on Trump's win? Okay, in terms of personal perspective, in terms of as a trader or as a person myself. Okay, I'm going to share with you all the same. Okay, I'm going to share with you this post that I posted on Facebook 4 hours ago. Okay, so what I would say observe, all right, on my news feed is that a lot of people are posting about, you know, how disappointed they are, and how basically they are in favor of Hillary. All right, and the idea here is, you know, some of you guys might have expected you know, that Donald Trump might win, all right? Or some of you might have expected that Hillary will win. You wouldn't have expected that everyone will vote for Donald Trump. And this is something very similar to Brexit that happened earlier this year as well, right? A lot of people thought that, you know, Brexit won't happen, right? Basically, even if, you know, you cast a vote and such, Brexit won't happen, but it did happen, right? So what I want to share with you is, this is my personal perspective, not so much on the market, all right, but this is our personal perspective, is that using this events, all right, that happened in 2016, basically I feel that what we need to do, all right, especially if you are a trader, is to do this, all right. So I actually shared this thought that I had after looking at, you know, some of the news feeds that are happening on Facebook, is that I feel that, you know, we always talk about you know, how this result shouldn't have like this, we didn't expect that and such. But what I feel important is how we deal with the result, how we deal with the outcome, how we as an individual or even as a trader or investor, all right, responds to the result. Okay, so you can only do that if you actually plan out the scenarios that potentially can happen. All right, and this is the case where I just now shared with you in terms of Kiwi dollar. All right, how as a trader, all right, you always pre-plan your analysis even before it happened. Okay, so that's where you know that if this happened, I'm going to do this. If this happened, I'm going to do this. All right, so my take on Donald Trump is that you should have, if you are a trader, right, you should already have this analysis plan that if Donald Trump wins, all right, this is going to happen in the market, and as a trader, how am I going to capture and leverage on this opportunity? Right. So my personal perspective is that short term wise, all right, my view, all right, short term wise is that if Donald Trump introduced its tax policy, okay, we might see that some companies are going to benefit very short term, okay, and that is going to contribute to the rise in S&P. But over a long term, all right, if the debt on US gets piled up, all right, and Donald Trump doesn't solve the debt issue on US, we might see a lot of companies in the US suffering. All right, funds might get pulled out from the US as well. Basically, if he doesn't deal it properly with in terms of diplomacy wise, right, we might see a lot of funds from Saudi, from China getting pulled out from the US market itself. And if funds pull out from the US market, your stock market is definitely going to suffer. Right, so what it means is that your S&P is going to drop, right? But all this, we never know what's going to happen, right? But we can anticipate it happening. Okay, so what I'm doing right now is I'm planning, right? If this happens, how as a trader I can take note of it, right? So if Donald Trump introduced that tax rate policy, basically introduced his tax policy, short term wise, I'm going to see S&P rallying. Right, so with that expectation, I'm going to start looking out for opportunities to buy into S&P. All right, so that's why just now I also shared with you my perspective on S&P as of now. All right, if everything unchanged, all right, my perspective on S&P is still higher up. Right, expecting it to reach 223, 2236. All right, but if let's say as we progress into 2017 and such, and then the US debt starts to pile up more and more, and then I can see, how it's going to start affecting the companies, and I'm starting to see, funds getting pulled out from the US market. Then this analysis might change, all right, and then we might see a huge sell-off or a bigger sell-off in the US stock market itself. All right, and of course, when I talk about US stock market, that is going to trickle down into the currency market as well. Okay, because if stock market starts to plunge, you will definitely see some currency strengthening. All right, let me just read off here. There are a lot of uncertainties as referred to him. Would that be a sign? Okay, so basically, your question is asking about with Donald Trump being the president right now, there's a lot of uncertainty that's going to cause in the financial market, right? And the points that you mentioned about Mexico as well as the Muslim people, right, is all true, right? And this is definitely going to affect the sentiment in the financial market because of uncertainty, all right? That's where you are also accurate, all right? Talking about safe haven currencies as well as precious metal like your gold and silver, that's where it's going to be bullish, right? So that's why my bias towards gold and silver is still bullish long term. And when you talk about precious metal, there's always a production cost to it. Okay, so that's why if you're trading gold and silver, it cannot go to zero, right? So your risk, if you can stomach it, is you can easily put a stop loss at zero. It's definitely not gonna hit, all right? And if it falls too low, because of the production cost and because of it being a precious metal, it's gonna get supported. Right, so long-term wise, your precious metal is going to go up, all right? And of course, with the recent sentiment, because of uncertainty, is also definitely going to go up, all right? But in terms of Japanese yen, let me go back to Japanese yen. Because of this, Japanese yen or dollar yen will be slightly tricky to trade. Sorry, let me pull in the right chart to show you what I meant. All right. So the top flow or the analysis that, so because of risk environment, all right, and because of uncertainty, safe haven currencies like Japanese yen and Swiss franc is going to be strengthening. All right. But the tricky part over here is that if you are looking at dollar yen, it's important to take note that you're actually looking at also US dollar itself. Right. So if you want to trade a safe haven currency, my advice to you is look at more obvious disparity or divergence between the currency pair itself. All right. For example, Aussie yen, all right, or Kiwi yen itself. All right. So if you look at this Aussie yen and Kiwi yen, if you want to play off the sentiment of safe haven, go for Kiwi yen or Aussie yen. Basically, if there's a lot of uncertainty and Donald Trump introduced more uncertainty into it, for example, he's being very radical. He starts to introduce certain policies that doesn't really make sense, doesn't really help the financial market. Right, definitely funds is gonna flow into safe haven like your Japanese yen, and your risk currencies like Aussie and Kiwi, all right, is gonna be selling off. So the best pair to look out for is definitely your Kiwi yen or your Aussie yen. Okay, that's why in terms of longer term perspective, all right, I'm bearish on Aussie and Kiwi. Just now I shared with you on this wave analysis time frame as well. Aussie long term wise, I'm bearish. All right, but I would want to see price to reach this level first at 0.8112, and then after that we'll see risk currencies falling lower. Right, similar to Kiwi dollar, very similar to Aussie dollar as well. All right, once price reach over here this level, we'll see a huge sell off in our risk currency. Right, basically I'm long term wise, I'm expecting Aussie and Kiwi to fall off. Right, and what is the best currency pair to pair off with this is definitely your safe haven currencies like Japanese yen. Right, and of course, if you have access to Mexican dollar, I think we did this analysis some time back. You can see Mexican dollar weakens a lot, all right, because of Donald Trump as well, all right. If you are looking at this is definitely on an uptrend. Even if I go up to weekly time frame, all right, it's very obvious that dollar against Mexican peso is gonna continue rallying, right? Especially with Donald Trump winning. Okay, so if you're looking, if you really want to trade this kind of exotic pair, it's pretty clear cut that this trend is also on an uptrend, right? But of course, as a retail trader, you probably won't have the psychology and the funds to hold on to weekly time frame trade. So what you can do is, from weekly time frame, drop down to a lower time frame. All right, for example, H4, you can see this huge rally right now is retracing. All right, wait for that retracement to complete. All right, basically perhaps over here, this level. Let me just do the right color. All right, and even if you start to pull in your Fibonacci tool, you can see that it's a 50% fit retracement. All right, so you can see that this level will be more a decent buy compared to buying it right now over here. All right, I don't trade this pair. I'm not sure about the spread. I'm not sure if usual brokers provide you with this asset to trade. But if you have access to dollar Mexican peso, you can really look into buying this currency pair up. Right? Any other questions that you guys have? All good? Okay. Okay, I don't see any questions coming in. Right. Hopefully that today's sharing though is not the usual kind of webinar that we do. Right, because basically we go through fundamental, some of our directional bias based on economic-wise fundamental data. But today, because of the recent events that's happening, market is not going to respect your economic fundamental data, but it's definitely more sentiment-driven wise. That's why we share a lot more on technical as well as sentiment perspective. What are some of the opportunities that you play out of? But again, things to take note is we are going into the end of the year. All right, market is definitely going to be quieter, quieter. All right, so when you are trading, means market is going to be thinner as well. All right, so always be mindful of all those events that's happening. You know, the sessions that you're trading, the time that you're trading as well. Right, because if you're not aware of all these things, you can easily get whipped up of the market and then you're not sure what happened. Okay, and of course, what we are doing is, for me personally, all right, I'm also working on to beta testing new methodologies to complement our own strategies right now already. All right, so once we beta test sufficiently, all right, I'm gonna share a little bit more about how we do it. All right, so I'm just going to quickly introduce to you, let me see if I have it. Okay, before we end off this webinar, I'm just quickly going to share with you some, hold on, let me pull out the right things. Okay, over here, I'm going to share with you this first. All right, so before we end off, I'll just quickly share with you, even us, right, even coaches and trainers like us, when we do trading, we always, all right, first thing is we always practice what we teach, all right? So we will only share with you things that we do ourselves and experience ourselves, right? And one thing is, I always share with all students that, even if you're not students, I always share with traders that you need to do these things called trade journaling, because if you don't journal, you won't be able to track your progress. You won't be able to, you know, improve on your trading and etc. Right? So over here, I just want to quickly share with you one way to do trade journaling. All right, and with technologies nowadays, very simple, is always screenshot your analysis, always screenshot your chart. Okay, so I want to show you that, you know, since 2015 onwards, all right, we have screenshot of all the charts that we have, all the charts and analysis that we have done, moving even into 2016. Right, and why is this so important is, I would like to share with you, all right, importance wise, is this. Okay, recently I started studying a lot of wave, all right, and see how wave analysis, and see how we can complement that with our current strategies, all right, to improve not only just the hit rate, but also conviction, and having a very good idea as to where and how the markets are going to move. Right, so recently, in just recently means last week and this week itself, I started studying a lot on it. All right, started practicing a little bit in the market as well. I just want to show you, you see, these are things that how you as a trader should do as well. All right, basically screenshot your chart. Right, I can just show you an example of it. All right, screenshot your chart so that you know, right, what are some of the notes that you put in, some of the analysis that you've done, so that as the market moves, all right, you can actually analyze whether you know, your analysis, your forecasting is correct, right? And if it's correct, right, it starts to build more confidence to you know, continue doing what is correct. And then if it's not, then you need to start you know, tweaking here and there, find out where you can improve and such. Right, so I just want to quickly share with you, you know, on top of just screenshot, all right, the other thing that you want to do is also to start, you know, writing at least a physical blog, or if you want, all right, you can also start writing a blog online. Okay, so this is a personal blog that I just started for my journal this time around, all right. So if you want, you can follow me on this blog. All right, it's again not a signal sharing blog or website, but it's just something that I would like to share with you that I'm doing personally as well. All right, so you can also follow through, you know, what are some of the learning process that even traders, coaches, and trainers like us do on a daily basis. Right, so this one is a blog that I just started to track my learning journey on wave analysis, right? And it's pretty interesting because I did this analysis yesterday, which is 8th of November, right? Before the US election. right? Just quickly share with you, right? And almost all of them hit the target as analyzed, right? So right, dollar index, all right, I forecasted a fall based on this wave analysis, right? And if you go and check on today, it did even below this 97 level. Okay, euro dollar expected it to go up to 1.1138, right? As of now, price is even higher than this. Pound dollar, all right, expected it to reach about 1.2550, right? If you check on the price, it did reach that level, right? Gold, right? I expected it to reach 1321. As analyzed from this, it did went towards that direction as well. Kiwi dollar, not much, right? Based on this analysis I did yesterday. All right, S&P, it was a miss, all right, because I expected it to rally up, but it didn't. It went slightly lower, and then right now it came back around this level where it started. All right, in terms of dollar Canadian, it did fall towards 1.32 before it rallied higher. Right, and dollar yen, don't have to say, definitely it dropped below 101.72 for today. Right, so just like to quickly share with you that Aussie dollar basically nothing much, right, still the same. Right, so I just want to share with you that all this journaling is important because you can quickly check whether you made which part of your analysis is right, then you can continue doing it. Which part of your analysis is not right, and then you can quickly comment and tweak onto it. Right, so you can see my previous day, which is 7th of November, my blog post over here, right? You can see that I've actually learned a lot, right? So that's why the title over here is many lessons learned over the weekend, right? Basically as I trade and beta test, all right, I always test with a live account, right? I don't believe in doing it in demo because of trader psychology, right? If you're doing it in demo, your seriousness, your commitment won't be there. But if you put it into a live account, all right, don't start off with a huge live account, start off with a small live account. Right, your whole journey is going to be faster, and your learning curve is definitely going to be exponential, all right, because real money is involved. You are going to be more committed to your learning, all right. So I want just to share with you that as you learn, you also start to journal down, got stop out on 3 of my position, all right, and then I realized that my forecasting and my count was inaccurate. Right, and after that, I spent the entire weekend looking into it, and then after looking into it, all right, I found out where my mistake was, and then 8th of November, you can see the forecasts were way more accurate. Okay, so today's in the video that earlier today I shared with you some of my wave analysis. All right, you can also look out on today's latest blog post that I post. All right, all the forecasting is also here. Okay, but again, I want to just quickly disclaim for those who see all this and then straight away think, oh, it's a signal service. It's not, all right. This blog again is a personal trading blog that I start to journal as my learning journey for this, right? And then eventually, I just want to share with you guys, especially those students, right, how trade journaling is being done and how you need to put in the effort if you really want to improve on it itself. So that's about it. Most of the things that I want to share with you guys already, all right, especially in terms of the market as well, right? So if there's no questions, all right, we'll end off. Oh, sorry, we have one question. Okay, the blog address is kayong.com, all right, so I'll just type it in for you. Again, this is just a personal blog. I always encourage all traders to start blogging and start just journaling your trade down, all right? We have some students who are very actively and committed in doing that, right? They put in the effort in doing that, and they do see that benefit and result in logging. Okay, so if you haven't started doing it, I would strongly encourage you guys to start doing journaling. All right, your journal can be in a form of digital blog. It can be a physical book that you start to write your thoughts in. Some of the lessons that you learn, etc. That's very important. All right, so for the room inside, this is the website that you can go to, all right, for my blog. Okay, so other than that, thanks for being here today. All right, this webinar is also recorded, so if you miss out any parts of it, all right, feel free to revisit this recording. And of course, the thing that we always like to share with you guys is the intention of running these webinars are not to provide you with signals or where to take trades, but is to walk you through the thought process, right, of how we analyze and how we take trades and how we learn and develop ourselves as a better trader. All right, so always focus on the process that we do, all right, rather than what trades to take, what setups that we have in today. Right, so with that, we'll end off today's webinar. All right, and any questions, again, I would just like to remind all, feel free to email or comment on this video below. All right, we'll reply you. And other than that, we'll talk to you next time. All right, see you guys. Good night.